Hey everyone, how's it going? This is Richard, and welcome back to another Stock Market Outlook video sponsored by MarketSmith. As always, we're going to run through the major indexes, talk about the overall health of the market, some key stocks to watch as well. At the very end, I'll give you my overall take on the health and breadth of this market and what to expect going into next week. Currently, we're looking at the Nasdaq Composite. Obviously, we're still below declining 200-day moving average. We're back above a rising 21, so kind of that short-term trend is up as of this moment. We're also above a declining 50, so kind of mixed signals from the intermediate sense of things, but it's good to see us above that level, and I'd love to see this start to curl up and have us kind of form higher lows and challenge that 200-day moving average. Overall, this index has been lagging a little bit. The Dow Jones obviously is above this 200-day moving average. If we go over to the S&P 500, that's the S&P 600, here we go. You can see we're a little bit higher and closer to this level. So this is an area where potentially we pop above or we're rejected from, and we have to stay cognizant of that fact and just be aware that this is a potential point of resistance. And actually, before we get any further into the video, I do want to point out that there's a really good deal going on over at TraderLion for our Black Friday sale, where we've kind of discounted every single course that we offer. Oliver Kell's Swing Trade Masterclass, the U.S. Investing Champion of 2020, Jared Tendler's, of course, Trading Psychology Masterclass, Stan Weinstein's Masterclass as well. So if you're looking to basically learn from proven performers, market legends, and mental game experts, this is the sale to take advantage of. And we've got something for everybody. I would highly recommend if you really want to get ready for the next uptrend and be able to catch all those market leaders. I think the Masterclass bundle is the absolute best deal on here. So definitely go ahead and check that out. But if you're looking for something else or you're more investor minded, this might be the better choice for you. And if you're looking for kind of more direct mentorship, guidance on a day-to-day basis, there's also a really good deal we're running for 2 years off or 2 years of private access for the price of one. So definitely check that out if you're interested in it. The link should be popping up right now and is also located down below in the description. And if you have any questions whatsoever about this sale or anything at all, drop it down below in the comment section and I'll be sure to answer all of them. So definitely go ahead and check that out. Once again, the link is located in the description. With that said, let's dive back into MarketSmith here and first take a look at a weekly chart and go back to the Nasdaq Composite because this is pretty critical. If you plot a 30-week moving average, we were rejected from that on this past week. You can see a little bit of a downside reversal week after a very strong week, just one week prior. And you can see the same big picture. We're below declining longer-term moving average, and we remain in that downtrend for now on the longer-term time frame. But in the short term, we're forming these higher lows and back above those short-term moving averages. Moving on to the S&P 500, this looks very similar, just a little bit stronger as we've already gone over. And now let's move on over to the IWM, the Russell 2000 index, and let's go back to a daily chart. Okay, so bringing up this chart, you can see that once again, we're a little bit stronger than the NASDAQ. That index has been lagging up to this point. We're right at that 200-day moving average, experiencing some chop around that level, but we're back above a rising 21. The 50 looks like it's just barely declining, but it's basically flatlining here. So I'd love to see us consolidate for a little bit more, tighten up a little bit, and then pop back up here. But keep in mind that, we kind of saw that same type of behavior back in here. Obviously, we were further below the 200-day moving average at this point, but from this tightness, it doesn't always resolve to the upside. So be prepared either way, whether we pop upward and really assert ourselves above these moving averages or we fail. You should have risk management in place or a watch list of stocks you want to buy if we do continue to push higher and see breadth continue to expand and leadership continue to expand as well. So that's really important. Don't just expect that a bull market is going to take hold right away, and be aware that the longer term trend is still down and that we could still experience some chop and could still obviously undercut these lows. That's definitely in the cards potentially, so be ready either way. Looking at the IWO, which is kind of Russell 2000 growth in particular, we're very similar, right at that 200-day moving average, experiencing some chop. But once again, I'd love to see this tighten, hold above a rising 21 EMA, see that 50 SMA kind of curl up under price, and for us to really push above this 200-day moving average for the first time really in a year. It's actually almost been a year here. If we go to a weekly chart, you can see we broke below the 200-day moving average, or the 40-week on this weekly chart, right in this area, which is basically Thanksgiving last year. and we had that key kind of failed breakout, which was kind of the first warning sign. So yeah, I'd love to see us get back above this moving average, and also this spot right here around 250 is going to be a very key level. You can see it was kind of support in this area, then it was resistance, and I'd love to see us get back above that level and really break out and see stocks really explode and form great uptrends. That's what we love to trade, and that's kind of what we're looking for. Moving on to the FFTY, let's bring that up here. This looks pretty bad here. We're still in a downtrend, having trouble with that 50-day moving average and well below a declining 200-day moving average. Bringing up ARK, you can see that this is very similar, having trouble with that 50-day. A lot of the stocks in this index are 2020s leaders, and even if they did rally really hard, a lot of them are just kind of moving off the bottom and experiencing a lot of volatility, and many of them are 70% off highs or more. So they're not going to be likely the next group of market leaders. We're looking for new leadership, new and innovative companies in new industry groups. We've got solar acting well, we've got oil and gas acting well, biotech, semiconductors a little bit as well. Banks are doing well. That's not really a spot for growth really, but those names really have been shaping up, and also kind of brokerages as well. That's a spot that's showing some strength. So as you go through your watch list and go through your screens, keep note of stocks that show up repeatedly, and keep note of stocks within industry groups that show up over and over again, because that's going to really focus your attention on where the money is flowing, where is rotation going to. And recently, especially last week, it was solar and semiconductors, and we'll go through a bunch of stocks in just a second. But first, let's bring up the mega caps, because that is always a good thing to take a look at. Tesla, very negative below these lows, just in a downtrend now, below a declining 21, 50, and 200 SMA. So whatever you think about the fundamental story, what have you, it's in a price downtrend. So we want to align our actions with this price trend. The ideal scenario, of course, is that the fundamental story is amazing. The stock's in an uptrend as well, or just moving into an uptrend. That's ideal, but we don't want to be, forcing our will on the market where we think the fundamental story is amazing. We think Elon is the best CEO ever. None of that matters really unless the price and the market agrees with your assessment. So always align those two things, your actions with the market. That's really, really important. And as of this moment, we are in a downtrend. Bringing up Apple, this is definitely a lot stronger, above the 50, 21 EMA, still below that 200 SMA. So just kind of chopping and consolidating here. Definitely one of the strongest of the mega caps. Bringing up Meta, this remains in a downtrend, but we have rallied pretty strongly here off lows and forming a little bit of a flag. Still below declining 50 and 200 SMA, and still within that longer term stage 4 decline. Bringing up Google, this is also having trouble at its 50 SMA, below declining 200 SMA. Let's bring up what's next, Netflix here. And you can see that this is a little bit stronger. This has been stronger. I've mentioned that pretty much every week here. We're above all the moving averages. We're pulling back in an intermediate sense, but it's good to see us back above the 200 SMA. I'd love to see it kind of base out here, form a key pivot, and see that 200 SMA continue to flatten, and then see a nice breakout and move to the upside. Looks like we got pretty close to filling this gap. We haven't yet, so that could be a potential target for a swing trade. If we do push out from this short-term flag here, which I don't like the gap down in here, but you can see volume on this pullback is a lot lower than volume to the upside, and that trend kind of started back in this area where we had the stage 4B minus setup, where we broke above the 50-day moving average, and that setup is from Stan Weinstein, which of course, if you want to learn more and actually see him go through examples, check out the course and take advantage of that Black Friday sale. So with that, let's move on over to Amazon, the last of the mega caps, below declining 21, 50, and 200 SMA. So once again, in a very negative price trend. It rallied strongly off lows, but still doesn't look too great. Although you are seeing this pullback on declining volume, you do see all this volume coming in here, definitely very negative. And you can see overall in the last quarter, funds are distributing stocks. So that's pretty much it for the mega caps. Let's actually take a look at NVIDIA as well. Semiconductors, as you can see, rallied strongly in this area. Last week they were pretty strong. A lot of them are stronger than NVIDIA. And you can see we're still below declining 200 SMA, but we're back above those short-term moving averages, which is a good start. AMD as well, one of kind of the bigger caps within this space. You can see a nice strong rally, pull back on lighter volume, and back above those moving averages. So I'd love to see this continue to develop, form some higher lows, and get back above that longer term moving average. But in terms of individual names, they're acting quite well. Let's bring up AEHR, a super strong trend above all the moving averages, holding that 21 EMA. You can see that this pullback to 17.6 was basically right back to this prior pivot. It's so funny how that confluence will happen, and it rallied super strongly. A little bit of hesitation here, so it might need a base at this point, but I'd love to see some tight consolidation above the 21 or 50, and I think that would be a prime leader that you want to really try to get into if it does form a proper base and sets up nicely. I love this increase in average volume overall off the bottom, and the numbers are fantastic as well. Moving on, we've also got GFS within that semi space, acting really nicely. And going over to a weekly chart, you can see it's basically been basing since its IPO. We had some excitement back here. This failed, but we're pushing out of this pivot right now. And I'd love to see this continue to work and challenge these all-time highs and eventually trend nicely. You can see super strong earnings growth. And looking at the annual estimates, there's not much to speak of here, but it's acting super strong, and the quarterly numbers are superb. You've got nice fund ownership as well. In the solar space, this kind of reasserted itself last week. We of course have a super strong trend above a rising 2150 SMA, a little bit short-term extended from a proper buy point, most likely right here or right here as it broke above the 21 and 50, and then here as it retested it, had a little bit of a short-term flag. Let's go to 60 minutes to see if we can see that right in this area. You can see that it kind of flagged out for a little bit, pushed up strongly on large volume, but now it's just trending nicely above those moving averages. So a little bit short-term extended. Once again, if there's a nice base, there's definitely a potential leader that's been showing relative strength pretty much this entire year. EMPH is setting up for a potential breakout. We've had some downside reversals, which are definitely caution signs and red flags. FSLR to me is the leader, but if this tightens up, you definitely want to watch for a big volume push and to see if it can finally break out through this area, this kind of 324 area, and close well as well. And I think FSLR, as I mentioned, is the leader, but if this can push out, this also has fantastic earnings growth, sales growth, margins, and really strong estimates as well. Aree, it's another name to watch, moving up the right-hand side of its base, forming a little bit of a short-term flag handle here. I'd love to see a little bit more tightness, but definitely want to watch as well if it starts to push up. And look at the estimates in terms of annual EPS from this name. This is huge. This is what you want to look for, and estimates are up. So this is some serious earnings estimates that you want to pay attention to. And I love the overall chart pattern as well, moving up potentially from that institutional due diligence phase. So definitely a stock to watch as well. There's definitely some other names within this group. SHLS is one that comes to mind that had a nice gap up. If this consolidates, it could definitely be in play as well. But overall as a group, this is definitely an area that I'm watching, along with oil and gas names, biotech, as I mentioned before, yeah, definitely potential leadership group. And moving on, I also want to talk about a few kind of biotech names. HRMY forming out a little bit of a flag here. MBIX pushing off that 50 SMA, and UTHR is coming back into play. Nice flag here after a breakout on large volume, so definitely actionable through this area, or it maybe needs a little bit more consolidation. One more week, would be awesome. Let that 21 EMA kind of catch up to price, and then this could definitely push out. Not super strong earnings growth, but a lot of these kind of bigger cap, well, this isn't huge cap, but a lot of the bigger cap biotech names like Amgen and REGN are acting super well. This is another one that's forming a nice flag. Super strong action above the 21 EMA. So once again, definitely a spot to watch. REGN is a little bit choppy, but compressing here against the 50 SMA. So we'll have to see which direction it chooses to go. But in general, a lot of these are acting quite well. So that's pretty much it for the names I want to run through quickly. Let me know your thoughts on the market, these stocks, and any other names that you think are worth taking a look at. I'll try to give my take down below in the comment section. But hopefully you guys enjoyed this video. If you did, please go ahead and leave a like down below, subscribe if you're new to the channel, and also make sure to take advantage of the Black Friday sale. I've personally been involved in every single one of these classes and basically putting them together, and I can vouch for their quality. And we've really brought on the best teachers possible, proven teachers as well. Oliver Kell, fantastic performance in 2020, 941%, is running his fund now. Ross Haber, of course, worked for O'Neill himself and also managed his hedge fund. Jared Chandler, mental game expert, and of course, Stan Weinstein, a market legend. So definitely take advantage of these. I think there's some fantastic deals here if you want to invest in your education and really get ready for that next bull market. This is the place to go. So once again, the link is in the description. And with that said, thanks so much for watching. If you enjoyed, go ahead and leave a like down below. Subscribe if you're new to the channel. And I'll see you guys in future videos. Take care.